Hi everyone, Weis Method, Master Volume Day Trader, and today I just invite you for the next lesson, how to read the Weis Wave chart and wave volume, combine also with traditional volume on the chart. So that's very important information once you analyze the market. And today I also would like to maybe prove the fact that those who are doing day trading, what I found out that the best accumulation and distribution patterns happen between 1.5 up to 2 days, sometimes 3 days. Those patterns we are looking for every week, and we do not trade on one asset every day, but we are looking for accumulation and distribution Wyckoff patterns. But it's not gonna happen like every day on every asset. Those patterns appear, maybe someone can say, yeah, on the smaller time frame, 1 minute chart, they can appear almost every day, but we are looking for much more bigger moves. So 1.5 to 2 days, sometimes 3 days, those accumulation are very powerful and those distribution are very powerful. So today we're starting from Euro USD 15 minute chart. Absolutely great example showing also the price behave, kind of the shakeout. And also we plot here on the chart the numbers which represent the traded contracts on the waves. I'm using Euro USD, but technically what I'm using when I'm trading Forex, it is a Forex represented by the future contract on currency. So let's say future contract for Euro, future contract for British Pound, or Canadian dollar, Japanese yen, and so on, so on. So let's start. And as you can see here, this is a 15-minute chart, and we have combined two volume traditional, which you see on the chart, and this is also very important volume, especially when you can see a wide spread candle. This is what we describe in very well and in details in our Wyckoff methodology course, and the spike generated by the huge volume. This is how we identify that smart money step in the market. We still don't know what they are doing, but big unusual volume, that extreme high volume represent institutional capital, smart money, composite man, however you call them. That's the money, that's not the retail money. So you have to be very aware. And after big drop, what is a very typical pattern, and I used to repeat almost every time, is a wide spread candle. Means the candle is very, very wide. And usually when the move is when the market is about to change direction, such patterns appear on the market, and we also see a huge volume. It doesn't mean that trade you're supposed to open a long position here. No, but what I usually do when I see such white candle, I draw the line somewhere around and see what is happening around this line, and the market will tell you the story. Later you need to be patient. So also see that took already 2 trading session. Okay, 2 days. Here we have 26. So here was 25, 26 here. So almost look at this market trade here, almost like 2 days, and then give us the answer. So let's start from this wide spread candle. We have also a huge volume, so we need something is about to happen. Why people why this candle is drawn here? Usually we call it selling climax. So this is part of our accumulation process. We have two accumulation process, number 1 and number 2. Selling climax, usually here we can see a huge white candle, and this candle goes together with huge volume. Okay, so this is a phase E. We never buy here, we never buy here, we start buying here or here after the confirmation. So but those patterns, as you see, works very well. And look what is on the chart, is almost same. Accident? I don't think so. So that's why the knowledge how and understanding how market is doing accumulation and how market is doing distribution is very crucial. That's the most information, the best information you can have. What you have behind you, there was accumulation, and you expect still the market's supposed to go higher and higher, or you have a distribution and you don't look for any long position. If you have on the background there is a distribution. So that's why it's also very important to judge the market. And I think that without this knowledge you cannot properly trade on the market. And whatever indicators you use, doesn't matter which indicators you use. The matter is if you understand what is going on the market, okay, then you can use your indicators. But market has a structure, you need to remember, and that's why we describe the structure here during this lesson. And more lesson you will also find in our Wyckoff Method Mastery class on volumedaytrader.com. There's a lot of lessons and practice exercise, hands-off on exercises. That's our major course, so you can understand how to use the volume and how to volume works on the chart and how to read the volume. So let's start and read this. So we saw that the white spread candle, big volume, it is stopping volume and also called selling climax here. Okay, Wyckoff really well describe it. And that was usually on the end of the move. Market usually do extreme volume again. This is panic. Okay, retailers are selling in panic, and a composite man or institution say, hey, it's cheap, let's buy it. Okay, so here is very big volume, and usually it is a low range of accumulation. Okay, and after, when the markets draw the low here, usually this wave, the first wave, it's called automatic rally. It's here, automatic rally is here. It is also a short closing. So those who has a short position, once you are short on the market, you become a buyer. So you have to buy it. So this is a buying action here, and also closing a short position, because to take the profit, if you are short, you need to buy. Yeah, I think you understand this process, how short transaction works. So that's the huge number. And look at these numbers. We don't have a whole chart, the bigger picture of the chart, but here we have the up wave 34, like 3,400 contract, 1,600 is divided because we don't want to have big numbers here. 2,000, 7,050, and here, boom, there's a 33,000. That's a lot. Yeah? This is the biggest number which appear on upwave. Okay, and then when market is going to phase B, okay, it's generate very random moves. So it's very hard to read this market here. But look what's happened when the market tries again, goes down, generate 4,900, very big number. But did we have a new low? We break this low? No. So what it means, someone sell a lot and someone was buying a lot. So someone put a lot of pressure on the market, but there was no result. There was a buyers. But have a look farther. Next wave, 27, 23. Listen this. 49, 27, 23. You see that the number, the supply is decreasing. Sellers losing a momentum on this chart. And then we have, after this, we have a fake breakdown here. This is a fake breakdown. It's a spring formation. It says, that's why this is accumulation number one. When the market form the line here, then create something what we called in Wyckoff analysis spring formation. Okay, so this is phase C, and then the market rise immediately in a phase D. Okay, so this is a fakey signal. And how do we know this is a fakey? 49, 27, 23, the pressure of seller decrease, and decrease. They break, and then really on the next candle, they recover and they close in a range. Okay, and they really fast went to the upper side, and finally they break here 71. Of course, market sometimes testing, you know, also big volume, but someone vacuumed this volume, this selling pressure, and the market went to the upside. Okay, so that's the Wyckoff, and here we have a phase E, means that we have accumulation as a background, and phase E we only look for buy position or like for long position, and if the market will go to the upside and we have such picture, we're waiting when the market come back again somewhere here, or sometimes maybe a little bit deeper, and goes back again, because accumulation is our background. So that is very important, and that is how to read, how we can read the chart. So more lessons are in our program Wyckoff Method Mastery, and thanks to cumulative volume or Wyckoff Wave Indicator, we have a really clear picture. And once again here very shortly, the highest number on the wave. Look, you cannot see it on the here. You cannot see watching this and this candle. You cannot see it. You can see it here. You cannot see anything here. What's happening here? Look, the volume is very flat, but here you have very good picture. 49, 27, 23, boom. It is a fakey breakdown, and the seller lose the control. Okay, so that's accumulation process. That's methodology, has 100 years and always will be actual. Okay, thank you very much, and wish you a lot of good trades.